Good morning, everyone. I believe we are all fine and we are all doing good. So, like I said last night regarding the lectures we had, I said I'll be sending a video just for us to know what a trend line is, the trend line features, the rules for drawing them, how to connect them, a trend, which are the uptrend, the downtrend, and the sideways, the ranging, the consolidation, the action time frame, which I have shown, especially when I was talking to Tega and Dito. I expressed something like that. I showed them on the chart on the market itself. So for today, we'll be doing things on the trend line, the features, how to connect them, and describing a trend actually. So we're going to go from here. I'm going to be having a trend line. We are going to be going for a trend line. So yeah, let's talk about a trend line. A trend line is a straight line that connects two or more price points on a chart and extend into the future to act as a line of support and resistance. See, anytime you hear something like a support and resistance, this is what they mean. Like I really don't want to go too deep into this trend line stuff yet like that, but at least from here you have to know what you are doing. So from here, let's say this, let's say you have this. Oh, sorry, I'm coming. Let me do it properly. So let's say we already have this. You have this, you have this, then you have the market in between. I don't know if you understand. You see this line here, this particular one, this is your resistance. Are you getting me? This one below is your support. I hope you understand. This is a resistance and this is a support. It's as easy as that. This is a resistance and this is a support. Once again, I'm going to put it just something like this. You can have your trend coming this way. Let's say you have something like this and you have something like this, and the market is just going here like this. Here, the top is the resistance. The top is the resistance. This is the resistance. Then this down is the support. Are you getting me? This is your resistance here. This particular side is your resistance. This one I'm marking out is your resistance. This particular top, this top is your resistance. The bottom is your support. And I hope we are good with that. So moving on. The trend line features. Trend line features. They said a trend line feature, it indicates the trend direction. It indicates trend direction. That is directional, as I said yesterday. So what they mean is it indicates the trend direction in the sense that you have something like this. You have something like this. You see, like it's stepping upward, is going upward. So now this means this is an uptrend market. This particular market, this market is an uptrend. This is an uptrend market. I'm using a phone now just because I believe a lot of people here make use of a phone as well. So this is an uptrend market. You have to manage the way you are seeing it anyway. This is an uptrend market. Are you getting it? This is an uptrend market. This is an uptrend market. So, and they said it's directional. It gives you a direction in the market. This is an uptrend market. Okay, so, and for this, you already know an uptrend market. Then now we are coming for a downtrend. We are coming for a downtrend market. This is a downtrend market. That is a market that is coming down. A market that is coming down. This is a downtrend market. This particular market is a downtrend. This one is a downtrend. This is a downtrend market. You understand me? So that's a downtrend market. Then now, Then they said we have the sideways market. So these are the type of trend we have in the market. Although I'm still going to talk about trend, just like I said in the PDF. But we have the uptrend. So a trend line will give you a direction that this market is uptrend, this market is downtrend, just like it has given to us here. Then for the sideways market, you are going to have something like this. For the sideways market, you have something like this. You have something like this for the sideways market. That is when the market is ranging in and out. It's ranging in and out inside a support and a resistance. You get me? This is a sideways market here. The market is not coming this way. The market is not coming this way. It's not coming this way, like it's not breaking out. You know, it didn't break out. This market now, this one is not a sideways market because there's a breakout here. There's a breakout in this particular one I mark. There's a breakout in this particular one I mark. So for a ranging market, I'm coming. This is a ranging market. This particular type of market, this one is a ranging market. This is ranging. This is ranging, and they also call it a ranging market consolidating market or a sideways market. So those are just the easy tips to all these things. And moving on, they said dynamic support or resistance. That is, a trend line acts as a support or a resistance. Starts as a moving support in an uptrend or resistance in a downtrend. I already know what an uptrend is. This is a perfect example of it. I already showed us what an uptrend market is now. Something like this is going up, you know, it's going up, and this a downtrend. This is a downtrend, it's coming down. So here you already know that this particular place is your resistance and this particular place is your support. For this one, this is your resistance and this is your support. Are you getting it? So it is as easy as that. Then this trend line is easy to draw. We are going to be doing most of this when we actually get into the market. I hope you are getting it. Most of this when we get into the market. And if you want to get more about what I'm explaining here, because I've done it on the Telegram channel, you can still join the Telegram channel and check on everything we've taught other mentees. So now it is easy to draw because based on visible highs and low. What they mean is based on visible highs and low, a market is going to create something like this. It's going to be creating something like this. You know, something like this. So they said based on visible highs and low, it is easy to draw. Now I can just take my trend line and be like, easy to draw. Then I'll just be like, you know, something like this. You understand me? So they said it is easy to draw. Easy to draw. So this is just what they mean by it is easy to draw. Then it is widely used because as a technical trader, Trendline is one of the most important tools people use. In fact, in synthetic, I've not seen more than maybe 4 traders that I know personally that make use of indicator. I only know 4. People like HTC, Henry. I think it's even the only one I've seen that is very, that is very conversant with that kind of strategies. He use indicator most times, but for most of the traders, this is the best way to trade synthetic, the trend line, and it's very easy. So another features of the trend line is the fact that it is flexible. It can be applied to any time frame. You can draw your line on the lower time frame, on the higher time frame, on any time frame at all. I just hope you understand this. It can be drawn on any time frame at all. So that on that. Then they said rules for drawing trend line. The rules for drawing trend line. Number 1, minimum of 2 points. You need at least 2 swing high for a downtrend, or 2 swing low for an uptrend to draw a trend line. What that simply means is what that simply means is this. Let's say we have this here, then you need at least two touches at least. Sorry about this. Let me delete this and redraw it. You see, we have 3 touches here. We have 3 touches here. I'm coming. Let me delete this as well. So we have 3 touches there. So here we have a touch. We have another touch here. We have about 3 touches too below. So minimum of 2 touches. You need at least 2 swing high or for a downtrend, or 2 swing low for an uptrend to draw a trend line. Then 3 points for strength. Trend line becomes more valid after a third touch. Something like this. This is our first touch, 1. This is the second touch, 2. And this is the third touch. Oh, why is this giving me issues? I don't get. What's the problem, man? Okay, so let's move again. Okay, this is our third touch. This is the number 3. This is the third touch. So here too, it's not necessary that it touches the two sides the same way. Like if it touches the up 4 times, it must touch the down 7 times. No, it doesn't mean. You can have a trend touching the upside 4 times and touching the downside 2 times, or touching the downside 4 times and touching the upside 2 times. You understand? It's not a must that everything must be equal. You get me? So that on that. So 3 points for strength. And now I avoid forcing trend lines. Avoid forcing trend line in the sense that, let's say, this mobile is not letting me do what I really want to do. Let's say you have something like this. So maybe you are not trying to balance it, then you still, you just want it to touch. No, you don't force trend line to touch. Maybe it already touched this one now, then you are just forcing it to make sure that it fits. Now, the definition of a trend line, it is a straight line. It is a straight line. It is a straight line. You don't need to force trend line. You don't need to force it at all. I hope we get that clear. So moving on. I'm coming. Moving on. We'll be going to, then don't cut through candles. I said our trend line cannot cut through candles. I'm going to express that as a video too today. I'm going to express that as a normal video. I'm going to share a normal video for you guys, especially for this trend line, because you must understand what we are saying here. So don't cut through candles. Something like this. Let's say you have something like this. So your trend line is here like this. Then you see, it must not cut through candles. Never. But I now said yesterday, I said you should note it that unless in a fake out where the trend line can or must slice through the price action. The price action is just the movement of the market, this buy and sell. That is just the price action. It's nothing really serious. You get it? So except in a fake out where the trend line can slice through the price action. And I said how to connect the trend line for an uptrend. I think we already did for the uptrend here. We already did for the uptrend. This is the uptrend. We already did something for the uptrend. We said connect to, a trend line must touch 2. At least it must touch 2. It must touch 2. You get me? It must touch 2 points in the market. It must touch 2 points, either the high or from the low. A trend line is valid only when it touches 2. So when you have 3 or more touches, it provides you more strength. You understand that the market is strong. Then for the downtrend, it must touch 2 as well. 3 for strength. You understand me? Then this sideways market, this particular place, this sideways market, it's used for the sideways market. The market also must must touch 2 or more. You understand? For you to confirm that this market is ranging, this market is consolidating. It's just moving up and down. It lacks a direction. Yeah, just put it like that. It lacks a direction. So you connect multiple equal highs. You can understand this is equal. This is equal highs and equal lows, equal highs and equal lows. They are not existing each other. So your analysis, but that will be on the normal market stuff. I'm going to share the analysis. Like I said, your analysis must start from the high time frame, which gives the general view of the market. So the high time frame, we often have both a buy and a sell bias. And I'm glad we already know the type of trend, which are the uptrend, the downtrend. This is the uptrend, market that is going up. A downtrend, which is a market that is coming down. Then the ranging market, you get. So then we talked about action trend line and confirmation trend line, which I explained a bit to, like, maybe I don't even remember the numbers of students we had last night that actually stayed towards that particular place. So for now, I think we'll come to an end of this little explanation, and I hope this really helps. Thank you.